Hello, traders. This is your trader's friend. Thank you for joining me today for another video. I'm so glad you can be here with me. Today, I would like to share with you a wonderful discovery that I made. What I'm doing is I'm going back in the charts because, for the most part, I'm not trading the New York session as much as I would like to. So, I want to learn how to get an advantage in that market as well. So, what I'm going to be doing is printing out 1 minute, 15-minute, and hourly charts for that particular session. However, today when I was going back to look at some past price action, I made an amazing discovery. This is the Euro JPY on the 1 minute time frame, and this is the price action that I made the video about the other night. It's that wonderful entry. This is 4:15 my time. You got a break below all of the moving averages. Wonderful consolidation there, beautiful flow of the moving averages, and price just continues to bleed down. Actually, price bled down on this 1 minute time frame. Over the next 24 hours, price bled down about 200 pips. Now, this was what I discovered on the 15-minute time frame today. This is at 4:15 instead of 4:14. You see the break below all of those moving averages. Now, you could have gotten in anywhere around here, but you see how you are stuck in all of this consolidation, and this candle actually breaks that consolidation. So the entry on that candle is 108.37, and it falls down to 105.79. Now that's more than 200 pips, but in all fairness, it crosses over into the next day on this 15-minute time frame. Another thing I want to point out, even though you have the period of consolidation, your moving averages aren't nearly as close as they are on the 1 minute time frame. Now on the 1 hourly time frame, this is the Euro JPY on the 1 hour time frame. You'll see how you have that little period of consolidation. Now, this is where you get that nice break at 4 o'clock. So it's in that 4 o'clock candle that you actually get the break. And price continues to bleed down again until you get to that 105.79. And this is actually the correlation that I'm showing you, and I'll tell you the purpose of all this in a minute. But you get the break below that 50 period at 4 o'clock. Also, well, we know it's during that 4 o'clock hour. Also, even though you don't have your moving averages nearly as close as you do on the 15-minute and the 1 minute time frame, you do have your moving averages in proper order by the time price breaks through. Also, you have the 50 period closer to the smaller moving averages than it is to your 200, and also you have a nice closeness there between your 50 and your 200 period. Now, moving averages just don't show us advantages as far as when we can get into the market. Moving averages also tell us something else very important. As long as price is below your moving averages, it shows weakness in the market, and you can see how that bled down beautifully and stayed below those moving averages very, very nicely. Okay, and I'm actually going to have to shrink this down so I can show you this properly. But you can see all of the challenges you got of your 50 period on the 1 minute time frame before price continued to fall down. Let me shrink that. Okay, guys, I'm not going to be able to show you in one frame, but we can count the challenges. You got one challenge to the 50 period here, two challenges to the 50 period, and then you go on to challenge to 200, one, well, pretty much several hours. So that's 1, 2, 3, 4, 5, 6 times, 7. You come down and challenge this 50 period again. Another, this is 2, 3, 4, 5, 6, 7, 8. Now I've lost count. But you can see how many times you actually come down to challenge the 50 period and the 200 before you get to that low. Now, this is one of the things that I want to point out, and it's totally up to you. But if you use the 1 minute to enter the market, then you can use the 1 hourly time frame to decide when to exit the market. And you can see that although you got a couple of candlestick challenges here, one, two, three, four, five, six, seven, before price ultimately reversed on you, or it came back to re-challenge the 50 period, because this is where we are currently. You can see that you could have ridden that down all the way. Now, I try not to pay rollover fees. You could have jumped out of the market at the end of the New York session and got back in later. But guys, this is not rocket science. You can absolutely do this. And I have to say, if you have any tips for me on successfully trading the New York session, and it's funny because that used to be the only session that I traded, and I used to trade that well. Now, I don't know. Yeah, I just have to get back in the groove of things. But I need to develop a pattern for um, making money in a New York session again. Guys, you can absolutely do this. This is not rocket science, but you must practice, drill, and rehearse and study your charts. Have a terrific trading week.